Hello everyone, welcome to our new webinar. It's December 9th, so welcome to our new regular webinar like each Monday. So just let me know if everything works fine. We are streaming this to multiple platforms so that we can begin. I can see the charts. The screen is okay. Hello Enes, how are you? Sound I believe is fine too. Just a second. It's very hard to follow and track all of the chats that's going on the multi-stream. Okay, so yes, we are good to go. So we will have most likely pretty interesting week ahead. As you know, we have a few decisions by central banks from Australia, Canada, from Switzerland, also ECB, and the most important event probably in the midweek will be the US inflation data. But before we go to some of those charts, I want to start today's sessions again with cryptocurrencies because, as you know, these are pretty interesting and volatile and very strong recovery. So there is a lot of questions that I get on a daily basis regarding cryptocurrencies, and that's what we also cover in our premium services. But of course, some piece of this analysis will be shared with you today as well. So if we firstly take a look on some of these crypto total market caps, as you know, we have seen a pretty nice move so far, but now the markets are a bit, and coins are, when looking at these total caps there, it looks like that we could slow down a little bit, and it's not a surprise. We are also seeing Bitcoin moving in both directions here around 100,000. It's a very big level, so I would not be surprised if we will see some retracement. Now here, looking at the crypto total market cap, of course the ideal scenario would be to see this wave for consolidation, maybe even back to 3 trillions before market makes another push to the upside. If we look at total market cap, obviously that excludes Bitcoin, even this one obviously at some point should see some retracements. Of course, once we will be able to count 5 waves up on each of these total market cap from August lows, that's when we will most likely look for a major top. But for now, we are not there yet. We are also still expecting that the dollar will possibly turn to the downside later this month, or maybe at the start of January when Trump will take office. And if that would be the case, maybe this could make another very nice push to the upside on those cryptocurrencies. Even if we look at both total market caps that exclude Bitcoin and Ethereum, you can also see that this one is in a very nice recovery, but some consolidation again is something that you should be aware of. So if you're looking at some opportunities on altcoins, you will definitely have to be very selective, but I would suggest maybe to wait on some deeper retracements here before maybe looking for potential opportunities. Here's the best ticker to track, obviously, for altcoins, crypto total market cap that excludes top 10 coins, and you can see that this one can also be looking maybe for some pause here before market makes another push to the upside. Of course, we're not sure if that's pause already happening right now, or maybe we'll see another push to the upside. But the idea is that whenever you will recognize some pause, something like this here that we have seen through October, that's when I think that new opportunities would be much easier to recognize across different altcoins. But why I think that even Bitcoin maybe could now be slowing down here is because if you look at this liquidations heat map, okay, now if you recall last time, okay, we mentioned that we are seeing here a lot of stop orders around 100,000, and I said that most likely we will see a push through this level to liquidate all of those who were short and maybe trying to pull in even more investors based on this extreme optimism, and then market will make a reversal. And so far we have seen 3-4% very nice push to the upside, and then a very strong move to the downside. And why this reversal lower occurred is because there were a lot of traders who wanted to trade this breakout above 100,000, because everyone sees this as a magic and very important price level. So what actually happened, if you look here on a smaller time frame, just let me load the charts, you can see that as soon as these liquidations occurred from those who were short here around 100,000, there were new stop liquidation orders from those who were long here around 94,000. So what market does? Well, firstly it cleared out those who were short, but then it made a very nice, very sharp reversal, liquidate all of those who wanted to ride on the long side with some small stop losses, and you can see what happens, market clear all of them. And if you look now here, maybe on a slightly higher time frame, that's a one month period, you can see that we don't have much of liquidations here, because otherwise we will see a yellow color here. We don't have much of liquidations here at the top or bottom. So that's why I think that maybe now it's period of consolidation, which means that maybe Bitcoin will see some maybe some slower price moves, only moves to the right, or maybe even will retest 90,000 level at some point, especially if more and more traders will try to again build longs here and they will put stop losses below that level. But why I think that we are still in uptrend, if you look here at exchange outflows, well, we are still not anywhere near to the previous extremes here. Okay, so there was some spike here back in November, but maybe that's one of the reasons why we are not progressing much to the upside now. But certainly I think that when market will slow down, we could see another push to the upside. But then when suddenly next very strong leg occurs here above 100,000, I mean to new all-time highs, and if at the same time we will start seeing these exchange outflows at extremes, that's when I will say that most likely we are nearing or moving into these very late stages of the recovery. So for now we are not there yet. Now looking at the wave structure itself and why I think that we could be in consolidation, as I said, based on this liquidations heat map, and also the more importantly, we have this an extended 5 waves up within wave 3. So we could be here now seeing maybe another pause for a wave 4. I think that if we see a dip 90,000, maybe even 85,000 could be very interesting support. Okay, of course there is a chance that we are still in this red wave 4 and that maybe even some other more complex correction here will unfold in this range, but based on what we see here, I just think that it's better to wait on new opportunities, on be aware of these pullbacks, which obviously, as you know, cryptocurrencies could easily be 10-20% in a very short period of time. It's better to be aware of such retracement rather than be surprised, right? I think that also Ethereum is testing some very important trend line here. It's going to be a very important week. We actually retested these highs from March of this year, but not really breaking through. So if we fall back into this range, could still be some kind of a triangle, or even if there will be just minor pullback from that high, still could be opportunity maybe to join this trend. But the idea is that we are seeing some resistance that could be very strong up here, so definitely not the best place to look for potential opportunity. If you look here, or maybe on a smaller time frame, you can even spot potential wedge formation. You can easily see the difference between this recovery, this lag, and this one, right? So that's something that we call it as an impulse, which usually occurs in the middle of a higher degree 5-wave structure. But whenever you have something like this with multiple substructures can be recognizable here in this lag, well, it means that most likely these bulls are decreasing. The trend is not that strong anymore. And if we also consider that we are at that major trend line resistance, maybe this break above the trend line will not happen just yet. Of course, I can be wrong. Maybe we won't get a pullback, but then just simply put, we will continue higher into fifth wave much earlier than I think. But whenever we see this retracement in 3 lags, I just think that there can be opportunity to join the Ethereum. So if someone is maybe looking for some short-term potential long setups, if we'll see retracement, watch the Ethereum. I think that it can have a very nice upside potential, but of course I would be waiting on some solid deeper 3 wave retracement. Someone is asking for Doge, Solana, Litecoin. Well, guys, we have all of this in our services, so we cannot provide all of these analysis obviously here in our webinar because something have to be protected for our members. So make sure to maybe to visit our website, or maybe even check some free articles and posts that we also publish through the week. Okay, now that was for Bitcoin and Ethereum. Now I said that today, I mean this week, we have the US CPI inflation data. Okay, so this should be very, very important because it will finally give us another, it will be another piece of the puzzle, maybe to be more convinced if Fed is really going to cut rates, or maybe will they surprise and be on hold. Now, for now, if you look at the Fed expectations, what speculators think, well, there's still almost 90% chance that they will cut the rates. Now imagine if inflation, which is expectations are 2.7, now let's say that inflation data will come above that number, around 2.8, then of course this cut will potential cuts will immediately be decreased, and this could make a very strong push to the upside, because now we are seeing here a 90% chance for dollar for potential cuts, but I do not see dollar index in a very strong downtrend. Actually, what we are seeing is the dollar index is trying to stabilize despite this non-farm payrolls report on Friday. We are seeing dollar that is trying to stabilize, dollar index around to 105.40. And why I think that this level is very important is because we also are testing right now this trend line that is connected from October 2023 highs. So I think that this is a very important level. I said also last week that for the end of the week on Friday should be very important, because we got this important data out that we will see if 105.40 will hold on dollar index and potentially even will close higher. I think that there is a chance that dollar will see another push, final push to the upside towards 108. On the other hand, if we'll see at the end of the week, obviously very strong drop below 105 or even lower, then this would set up a very strong bearish reversal for the dollar going into this new trading week. But because so far we don't have even a completed all needed subwaves, 5 subwaves here within wave C, and because we just stopped at the recent very important trend line, I think that it's still very important to realize that maybe another leg here to the upside is missing. Okay, it's not all about dollar index, as you know, and the dollar itself. It's also dollar index also depends on the euro, and we have the ECB this week as well, and they are expected to cut rates. And as you know, maybe even potential drop there could have a very strong influence on this pair, and we will see final pieces of this puzzle to complete the higher degree sequence. But these are the short-term swings. So if you're more like a short-term trader, of course, there's no top yet. There's still a chance to look for potential opportunities here on the long side, but you will have to be very selective, because always when we are approaching some, let's say, some major reversal, which I think will occur here in the next 2 months, some currencies will top out earlier than others or bottom. Okay, so at the important very big swings, not all currencies and currency pairs will bottom at the same time. Some will bottom earlier than others, but sooner or later they will again find the same very similar direction. But what I see right now, I just still think that maybe based on dollar index overall, I just think that you should be aware maybe of more weakness on the euro, but not necessarily maybe on cable. Pound has seen a pretty nice rebound, and I know that pound sometimes can make very strong moves unexpectedly on its own without connection to other pairs, okay, or currencies can completely diverge from others. But overall, I just said that we will expect a major reversal for the dollar here around 108, possibly after a final push to the upside. Now euro dollar, in my opinion, also obviously is coming into the late stages of this wave C, and you can very easily spot the potential substructures here. And we know that wave C is a motive wave, should be made by 5 subwaves. So I'm expecting this wave 1, 2, 3, 4, maybe final push to the downside here, and then a reversal to the upside. So I'm prepared on the euro. Of course, if we suddenly, let's say at the end of the week, we are back above 107.60, then we will know that most likely bottom is already in, right? Because wave 4, okay, should not trade into the territory of wave 1, because if whenever that happens, then we will know that that's not an impulse anymore, okay? Because impulses are sharp moves without overlaps, okay? Not something like that. So of course, if we see this overlap with 107.60, then I think that bottom here is in. So as I said, cable, it's the one of a few pairs that can already be showing potential stabilization. We tested this major trend line here. It's somehow extended triangle line here from March of 2023. So it's been respected down here, and even if you look closely on a smaller time frame, I'm sure that you will be able to recognize the structure, which may suggest that we could stabilize, but it doesn't mean that we will continue straight to the upside. I'm afraid that in the start of, or the first half of 2025, we could be moving sideways here before we potentially start breaking higher at some point. Now let's take a look on Aussie. As you know, CPI was lower than expected with latest report from Australia. GDP also came out below expectations. So RBI could be looking for potential cuts, but pair already saw some weakness based on these speculations, and decisions will be made in less than 24 hours, I believe. And so far, what I also see that pair is trying to stabilize around this lower trend line support. So I would not be looking for any kind of more weakness on Aussie versus US dollar. I think that some other crosses could be much more attractive. Aussie Kiwi, we talked about this one in last webinar last week, and also maybe some crosses like Aussie versus yen is looking pretty interesting, especially if we will see some rally there. Okay, so Aussie, based on what I see from a technical perspective, even if they would surprise and be very dovish, I just still think that the technical picture is not really showing me any kind of a good, nice potential structures here, where I would also say that in Elliott wave terms we are headed lower. Now, what I think it's very interesting to observe is dollar versus Swiss franc. I think that rate decisions from Swiss National Bank is going to be on Thursday, and actually they have inflation well below 1%, so they're expected to cut, just a second, let me check here, that's inflation data. They're expected to cut rates by 25 basis points. Okay, so but still not really sure if that will be the case, or maybe they can even surprise. But certainly it looks like that they could take dovish approach. Now, what this means, it means that Swiss franc could obviously fall versus US dollar, especially if, let's say, inflation in the US will come out above expectations and dollar index will start rallying. Now, then, of course, this could make a very strong bullish case for dollar Swiss. Now, that's from fundamental perspective. Now, from an Elliott wave perspective, and technical, I just also think that we have a very clear wave structure here. Okay, firstly, what we see, we have a very nice uptrend, right? And this uptrend can easily be counted in 5 waves as an ongoing 5-wave movement, okay, because we don't have any real overlaps. Even the substructure can be counted here by 5 waves. So I think that we're just now posing down here for a wave 4. Now, wave 4 is a corrective leg, right? And usually it will retrace for the 38.2% of wave 3, or sometime if the wave 3 is very extended, even only for 23.6%. But you can see that we tested the 38.2%. So again, this seems to be a very important level. It's even more important whenever you have the subdivisions that shows 3 waves down, right? So I think that's a pretty nice important substructure as well that suggests that we could be looking for potential stabilization this week. And one last thing that I think it's very important, you have here, if you zoom in a little bit, you have here this gap from, that's from Sunday, okay, 24th of November. So these gaps will very rarely stay open. Of course, you will have some occasions where gaps won't be filled, but if I have this fundamental picture that suggests that maybe a Swiss franc could drop, if I have dollar that maybe still is in uptrend when looking at across the board, if I have the Elliott wave patterns here, which suggests that we could see further upside, if we have silver and gold that are in pullback, well, all of these factors suggest that maybe Swiss franc will still be headed to the downside versus US dollar. In other words, maybe we are still missing one leg here to the upside. Now, again, when it comes to trading, keep in mind that it's Monday. Monday flows can be reversed, completely erased in the next 24 hours. So by Tuesday, these technical reactions that you were seeing through Monday sessions can be completely different by Tuesday. So don't try to maybe to play on the long side with stops here around the lows. Keep in mind that Thursday is still far away. We could easily retest these levels, potentially even move towards this support here around 8700 before we potentially stabilize and move to the upside. So you have to be very flexible here, but the important is to know where is the support and to know where is the invalidation level. So if I would start seeing prices breaking below this level here, 86.14, then even start accelerating lower, especially if we get a daily close below that level, then of course I would think that we are in a higher degree pose here rather than just in a wave 4. But so far, I just think that this price action looks very, very interesting. Okay, so I will also keep posted our members as well with these charts as always, and we'll also maybe share some views on Twitter. And by the way, as I said, make sure to check our website wavetraders.com for more analysis on a daily basis where we track cryptocurrencies, currencies, and other major markets. Now, if we take a look also on dollar yen, as you know, dollar yen is now trying to stabilize a bit, but not sure how long this can last because we have this broken trend line. Now we are just moving sideways. Maybe we'll retest it as a resistance here around 152. That's a very nice and beautiful potential resistance levels. I would turn bullish only if we see above 153.76, but I'm not looking at dollar yen as a potential trading setup because I know that there can be some back and forth move because in case of a risk off environment, both Japanese yen and US dollar can be very attractive, and this can cause some limited ranges here, and that's why I think that much more interesting opportunities can be on yen crosses. Keep in mind that yen crosses are looking very weak. Of course, there were some nice extensions to the downside, and I just think that after retracement we could see more weakness, and that sooner or later we will be back at these September and August swing lows. Now, if we take a look on CAD yen, as you know, this one has made a very nice reaction to the downside. We stopped here around 111, and that looks like an impulse towards the lower side of this flag pattern, or if you want, corrective channel. So some very nice support could be seen here, but if we see some rally in 3 legs, I think that there could be a more weakness coming, and 108 is then the first resistance that you should be aware of. Also, Bank of Canada, I don't think where it is. I think it's Bank of Canada rate decision is on Wednesday as well, so maybe some time for this consolidation to unfold, but then again they are expected to cut rates, and if they will be dovish, then of course this could pull dollar yen much lower, especially if on the other hand you have more and more speculations that sooner or later Bank of Japan will hike rates. Now let's take a look on dollar Mexican peso, and the reason why I'm looking at this one, as you know, I've been talking about this one last time. I said that we have seen a pretty nice reversal in 2016, 2017, and I think that in the next few months we could experience very similar situation, because back then Trump won the US president elections, and now we have a very similar potential scenario. Also, everyone was quite bearish on Mexican peso after Trump victory, but what actually happened? Well, there were very limited upside, okay? And if you look closely here now on a 4-hour time frame, this could actually be an ending diagonal. So let's say that I may be wrong with dollar and the dollar has already topped. Okay, then of course my focus will completely shift, and I would definitely look for currencies that have the most downside potential. And in such case, dollar Mexican peso could be very interesting, I think maybe in January, especially because ending diagonals, as you know, are very powerful patterns. Whenever they are completed, you can expect that price will reverse completely back to the starting point of that pattern, and that's down here around 18.60. So that would be in such case the minimum downside objective. But if you look, maybe zoom out a little bit, then of course whenever we step in this corrective territory, I think that there can be much more downside here on dollar Mexican peso. So as some backup plan for the dollar potential top, I definitely will have this one on my watch list here. Now Elena said, thanks a lot for this outlook. My pleasure. By the way, guys, make sure to subscribe to our YouTube channel here. If you're watching this on YouTube, press a like, leave us a comment below this video, and help us to grow, obviously. Now let's take a look on gold. So what's happening here? Nothing really much. I still think that we are here in this consolidation, and normally in the middle of consolidations, nothing will help, some short-term swings. I still think that we have some clear patterns. I even see some open gaps here from since mid of November. So I still think that there will be more downside pressure, and also, as I said earlier, some Monday flows may not be trusted. Okay, I definitely do not trust much, especially if I see some very sharp moves on this day. So I think that so far we have some very nice and sharp moves to the upside, and I just would not be surprised if we will see some limited upside. Now 2700 is definitely a resistance to watch. Below that you have 2680. So I would not be surprised if we see some sell-off, maybe even just temporary. But whenever I look also at silver here, keep in mind that we are also tracking a corrective rise, and I think that we are slowly moving into some very strong resistance. That was a swing high here around 32.50 from May of this year, and I just think that we could try to slow down this rally in the next few sessions. So overall, I just don't see any kind of a bullish pattern on silver or gold. I just obviously I realize that I can be wrong, but based on the substructures here, I just think that there is a greater probability to see another swing to the downside rather to continue higher back to new highs from here. I just think that gold, whenever it comes down, maybe even this 2400 range, I think that there would be much better an attractive price to start looking for potential longs. Now looking at the S&P 500, still this thing is just moving to the upside, but not easy to recognize some kind of setups here. When looking at the daily chart, I still think that we could be riding very late stages of this wave 3. I think that next year this wave 4 pullback could occur. But maybe in the short term, there's still some room left for more gains. I'm looking at VIX, known as Fear Index. Let me just align the charts here. And notice that here, this year, we were seeing these extremes, okay? So it looks like that there's still some room left before the VIX comes into this base zone, and that's when we could expect that maybe, because if there will be absolutely no fear, that's when we can expect the opposite and market surprise. So where will be a new good buying opportunities on stock market whenever you will have VIX at the highs, not at the lows. Now looking at DAX, obviously this one is also still very strong, and I've been looking even for potential wedge formation here since we are in fifth wave, so I realized that that's possible. But since we have a very nice and some sharp moves in a very short period of time here, maybe that's won't be even a wedge, maybe it will be just a simple impulse here within wave 5 rather than this ending diagonal. So I think that more upside should be seen, and of course if you want to look for potential opportunities, you should wait on some retracement. I think that the next wave 4, whenever this one occurs, could be maybe opportunities to join this trend. 20,000 would be the magic support, because we very easily actually cross this level. So if we can retest it, I just think that it would be worth to watch it and observe it as a potential new swing area. Now looking at crude oil, as you know, crude oil, I use it a lot in the past, and I'm also covered it in a webinar. Always when there were inflation in the US, I looked at the crude oil, but that has been the case when crude has seen some very nice and clear directional moves in the past month. Okay, not in this month, but month or 2 months back, because obviously that's a bit of inflation, because crude oil is based on inflation expectations. So what we are actually seeing is a very sideways price action here, but technically I still think that we could see a break to the downside. It's just a matter of time. But don't get too excited if we start breaking lower here beneath $65. I think that $60 could be then here very quickly and potentially even limit the downside, because I also have another interpretation here where it shows that what if we are here in wave 5 as an ending diagonal. Okay, so you can see that that could be a massive support down here, and a lot of reserve will try to be filled, especially in the US if the price will keep getting lower. But if they will try to fill their reserves and start buying aggressively, this could actually have a positive impact on energy prices. So I think for next year, watch what will happen around $61 down there. Could be very important level, but for now, based on both wave counts, I just think that there is room for more weakness, and that there can be very volatile, maybe end of December or early January here, the crude oil prices. Okay, now we finished this part. Now we'll look some of the single stocks. I will look at firstly here at Apple. As you know, this one is coming to the upside. We are seeing moves out of a triangle, so would not be really that bullish up here. Obviously, I think that there can be some resistance in January around 250, 260. Watch out for this upside, a potential limited upside. So based on this Elliott wave structure, it's not really good looking wave structure, which would tell you that we are going much higher. I just think that there is a risk that we will see some pullbacks next year. Now if we look at AMD as well, we talked about this one. We said that there is a chance that we will see this as a triangle, still unfilled gap above. So even if we will see some rally, don't get too excited. I just think that much more appropriate, much better support levels could be still coming whenever we get this wave C sell-off. So this one, I believe, is in consolidation here away from March highs, and this consolidation is not over yet. Now if we look at McDonald's, we actually covered this one, I think it was 2 weeks back, if not more. We said that it has a pretty nice, good looking wave structure, okay, because we have a very nice strong impulse to the upside. Then we got these earnings reports here and back at the end of October, and also we have some unfilled gap here. And I think that these gaps, as you know, are very useful. Always when price comes very close to these gaps, that's when you could see a new swing happening. But before that, gaps are seen as a magnet, and also we recognize very nice support around this gap, not fully filled here around 280, but now we are headed back to the upside, and looks like that was a free wave movement. So I think that this thing has more room to go, and maybe we fill this gap, make a new high, and that's when you should be very careful. So for now, I just think that McDonald's, at least in the short term, could see more gains. Now if we take a look on Microsoft, last time we talked about the triangle that should take us lower. Unfortunately, that was a triangle. Well, not unfortunately for those who own stocks. That's a triangle in a wave B. Okay, so triangles sometimes can be tricky, not easy to call a new direction unless you're waiting on a breakout. But now we are seeing a breakout. However, what's very important is that before that we had a pretty strong and sharp sell-off through some very important upward channel. So I think that marks the potential, at least temporary high here. And whenever you are tracking a correction, let's say that was a very strong uptrend, you need 3 waves up before you may continue confidently call for more gains here and resumption higher. But so far we have only 1 leg to the upside. So you have now wave B that is just becoming more complex. I think the 78.6% is a very important potential resistance. So watch out for potential limited upside here, and if we started dropping back in this triangle range, I think that there will be chances that this stock will be headed even lower for a pullback, for a deeper pullback. Now if we take a look, let me just delete this on PayPal. Now PayPal here is having some very nice impulsive bullish structure. We said that we are looking for a move towards 100 level, especially because we recognize this ending diagonal that came to an end at the start of this year. So far we have a very nice move higher, and I think that 100 can certainly be the case here, maybe in the next few weeks. But of course, be aware of this wave 4. Whenever this one occurs, I think that support that we should watch for is around $76 and $80. That's the whole area that you should be paying attention to. Now, Tesla, last week, as you know, I even posted on Twitter, we said that we are seeing, I don't have it here, we are seeing a triangle in a wave 4, and it was a very nice triangle, and now we are breaking hard towards 400 level. Keep in mind now that moves out of a triangle, okay, let me try to illustrate this, that moves out of a triangle, and sometimes the triangle, okay, can be similar, the breakout, I mean the leg out of a triangle can be similar in distance of the widest leg within a triangle. Okay, so that was this leg, and you can see that I came out with the triangle measurement projection here around just slightly above 400 level. Okay, and then you have also another interpretation where, let's say that as an alternate view, what if wave 4 has finished here, and then you have wave 1, wave 5 that equals to wave 1 around these levels as well, around 400. And then if you look here, maybe zoom out a little bit, you have a potential resistance here, right? So I think that you should be very, very careful here. I'm not saying that we are not going to break higher. I think breakout will occur, but at least in the short term, any kind of new trades, I mean, should stay aside unless you wait until you wait on this next wave for retracement, because market always moves in 5 waves in one direction, and then it will make a pullback in 3 legs, and that's definitely something you want to observe. So the next key area to watch, if obviously we see this pullback, is here. Okay, so if someone just missed short-term trade setups on the long side, I think it's a bit late. If we will see extensions to the upside, even better for those who are already in, because obviously markets can always surprise, but it's upon us what kind of wave structures we will trade, and definitely want to trade high probabilities patterns rather than just gamble here and buying at the highs. Okay, traders, that was for today. I see someone is asking, do Dow Jones and well, I'm not sure if you're our member, but you can ask in our chat room. We have a Slack where we can cover these markets as well, but obviously the S&P 500 is there updated for our website on a regular basis. So if someone wants to join, make sure to check our plans here, apply for a trial, or just follow us on Twitter if not, or just make sure to be with us again next Monday. Traders, good luck and talk to you soon. Oh, and don't forget to like this webinar, please. Thank you.